If you're in your 40s and 50s and you are making the best money you ever have, but you're still feeling tight every month, then this video is for you. See, the problem is not likely your income, and it's probably not even your mortgage. The reality is that your debts, mortgage, and your monthly cash flow are working against each other instead of working together. And this is why a lot of good income Canadian homeowners get trapped. This probably sounds like you, right? You have a great job, a great business. You probably have some retirement savings and some equity in your home. But at the end of the day, you're not living recklessly. You're not, living some wild, luxurious life. But every month it still feels heavy because you have things like your mortgage payment, your property taxes, insurance, kids, renovation, school, this or that, probably car payments. You're trying to maybe help out some aging parents. And every dollar seems to just have a job before it even hits your bank account. So the month to month, it still feels like there's no breathing room, even though, you know, eh, on paper, you are successful, but quietly in private, you're probably thinking, why is it still so tight? Now, most people think the enemy is interest rates. And yes, of course, interest rates matter, but really, for most homeowners, the problem is the actual structure. See, you have to remember you set up your mortgage at some earlier stage in life, and then your debts started adding up as time went on. And then, of course, your savings plan, well, that was set up like somewhere entirely different altogether. And now everything's pulling from the same paycheck. And you just have to keep in mind like your feeling is not because of one bad decision, it's actually because of 10 normal decisions now all stacking up on top of each other. Now, what you're feeling is completely normal. I actually call this the pressure stage. Now, the pressure stage is when your income is at its highest, but so are your responsibilities. So you got to remember, you're not starting off anymore. You're carrying the house, you're carrying your family, you're carrying the debts, you're carrying future planning, and oftentimes you're dealing with everyone's expectations. And this is where a lot of confusion for a lot of people settle in because you thought with more income, you would automatically get more financial freedom. But instead, what you get is life just being more expensive and more complicated. Let me break it down for you a little further. There's five specific places that you're receiving pressure from. There's mortgage pressure. Your renewal's coming up. There's higher interest rates and potentially a higher payment. There's debt pressure. That's your car loans, your credit cards, your credit lines, and other family expenses. Then there's lifestyle pressure. Think about vacations, home repairs, kids' activities. Then, of course, there is retirement pressure. You know that time is going by and you haven't been consistent with your investment plan. And lastly, there is emotional pressure. At the end of the day, you don't want to feel like you're moving backwards after all of this hard work. I understand the pressure that Canadian homeowners are going through. That's why when we start things with clients, we don't just look at rate, we actually start at looking at structure. See, the question isn't, can we just get a better mortgage? The better question is, how can we organize our mortgage, debt, savings, our monthly cash flow in a way that gives our family more control? See, the goal isn't just get a lower payment. The real goal is to provide you with better financial structure. And this is exactly what we actually look at when we review things with clients. We start off looking at your cash flow foundation. We examine what's coming in and going out. Then we look at debt reset. Do you have too many payments competing with one another? Then we look at your mortgage structure. Is it creating flexibility for you or just trapping cash flow? And lastly, we look at your wealth direction. Is there a plan that gets you from pressure to progress? So let's say a family that's earning good income, they're probably also dealing with mortgage, credit cards, credit line, car loans, and of course, they're trying to invest and save for retirement. Now, each payment on their own seems manageable, but when the payments are together, that's where they create the squeeze. So, what starts happening for most people is that they slow down on the saving side. They start using their line of credit to manage the credit cards, and the credit card balances start increasing. And of course, naturally, they just promise themselves that they'll do better next time. But the issue is not discipline alone. Oftentimes, the structure is actually broken. And when the structure is broken, discipline can only get you so far. See, the mistake that most people make is that they wait around till renewal time and start shopping around for rate as if that's the real strategy. And a rate quote will basically tell you what the cost of money is, but it cannot tell you whether or not you have a broken structure. And you can get a slightly better interest rate and still be trapped in the monthly pressure. So before you have a renewal, refinance, before you debt consolidate, extend on a mortgage, before you make any changes to your mortgage, you should be taking time to figure out what problem you need to solve first. So who's this review for? This is for Canadian homeowners that are trying not to be reckless. They're not looking for some magic trick, and they're certainly not trying to avoid responsibility. They're trying to create breathing room, and they're trying to protect their future, their family's future, and make smart decisions with the income and the equity that they already have. And sometimes that means staying exactly where you are. Sometimes that means restructuring everything. Sometimes that means just having a better debt repayment plan. And sometimes it means just using your mortgage in a way that's a little different than you are now. But the answer should definitely come after a review, not before it. So if you're a Canadian homeowner and you're making decent income, but you're still feeling that pressure every month, don't just ask what's the best rate. You should be asking, is my mortgage and my cash flow working in a way that helps me at this stage? That's the kind of review we help with clients. We'll look at your mortgage, your debts, your monthly cash flow, the equity, and the bigger wealth plan so you can see what options you have available to you. If you want help looking at your situation, you can book a free mortgage and cash flow review. There's no pressure, there's no guessing. We just look at where the squeeze is coming from and give you what options are available to you. Because at this stage of life, the goal is not just survive the payment. The goal is to give you structure that provides you breathing room, control, and options.